Everyone, this is Rob Roy, and welcome to the Elliott Wave Options U.S. Market Update. Well, what in the Chairman Powell Omicron is going on in the markets? And Bitcoin plunges. What's behind that? And the non-farm payrolls, the big jobs number on Friday, disappoints. What does all this mean for the markets? Let's take a look at the charts. At the time of this recording, it is 10:30 on Sunday evening, and currently the futures are up 20 points. Let's get caught up since the last update. Last time we talked, we had this little bit of a triangle here with a potential C-wave extension on this latest zigzag pattern up around 475. We did break out of that triangle to the upside and almost touched that exact 475 level. Got awfully close. Usually those levels actually get touched, so a bit surprising we didn't actually hit it. And then we go into the holiday week, the Thanksgiving holiday week, and Friday we get the big news of the discovery of the Omicron variation of COVID, and the fact that it has all these mutations and all this concern about the fact that the vaccines are going to have difficulty handling all the mutations, etc. Again, I'm not a medical doctor, but just relaying the things that were discussed. Well, that happens the night before, in the futures before Friday morning, which is a half trading day, the Friday after Thanksgiving. Normally a very low volume, quiet day. Not this year. So we get that big move to the downside, but a lot of people thought, well, maybe the move was exaggerated because it was on a holiday. And the markets did bounce back on the following Monday. Well, then we come in, and on Tuesday, Chairman Powell is having a conversation, a Q&A, with Janet Yellen, interestingly enough, in front of Congress, and mentions the fact that, yeah, they have to admit inflation's worse than they thought. They're going to bury the word transitory. They're not going to use that anymore, and they may, or at least at the next meeting, are going to talk about the fact that they may have to start the tapering even faster or accelerate the tapering faster than initially thought. Well, as soon as those words came out of his mouth, the market reversed and started to the downside. So then we get the big move down on Tuesday and back and forth throughout the rest of the week. Big bars, big intraday bars. Pretty interesting as you can see how small they were on the way up. They always talk about now you take the stairs up and the elevator down. That's how the markets move. So these big moves to the downside here, and when you look at volume, they're on pretty good volume as well. All right, so we all know what's happened. Where are we likely to go from here? Well, if we take a look at the moving averages, you can see that we are just a little bit oversold from the 10-day moving average based on Friday's close, and we are below the 50-day moving average. Now, we tried to break below the 50-day moving average, closed below it on December 1st, but no follow-through day. Got back above it on Thursday, and then back below on Friday again. But as we've noted in the past, the market has tested the 50-day moving average numerous times. This is nothing unusual. Now, this looks a little bit more significant here, but when you go and look at the weekly chart of the SPY, you can see that we haven't even broken out of that one standard deviation channel yet. And so looking at where we were with the 100% extension here on this zigzag, we've showed you in the past at 460, we're just kind of going through some sideways movement here. We haven't even hit the lower line of this one standard deviation channel. And then we take a look at the daily chart, we're still within that standard deviation channel as well. Just one standard deviation. So as crazy as it's felt over the past week, really, from a technical standpoint, not that much damage has been done to the markets. Now, we're going to try to hold right here around 450, I would think, because that's where the previous highs were back from the very beginning of September. So if we hold in this area and try to bounce back, get back above that 50-day moving average, all of this could be no harm, no foul, and a lot of people are still calling for a rally into the end of the year, getting into that week between Christmas and New Year's, which is normally called the Santa Claus rally, when the markets tend to drift higher. However, if we don't hold this area right in here, we could be looking at a lot more significant damage to the downside or a bigger move lower. What will likely happen if we don't hold in this area here is that we will retrace this entire C wave, and we'll be looking for the markets to come back down here where that C wave extension started. So the beginning of the week is going to tell an awful lot. As I said, the futures are up right now, a lot of time between now and when the market opens tomorrow. Another thing to take a look at, however, is that non-farm payrolls number that came out on Friday was pretty disappointing, adding just 210,000 jobs. Well, if you wonder how many they were expecting, well, they were expecting 573,000 new non-farm payroll jobs. We had 546,000 last month, so as you can see, that was a big miss. But one of the most surprising things in the jobs report to me was down here where you're looking at retail jobs. Normally this is a time of the year where we're adding retail jobs going into the holiday season, but that was sluggish and we actually lost retail jobs. So what does that mean again for the Christmas or the big holiday selling season? I guess we'll have to wait just a little bit longer to see. All right, so let's go back and take a look at some of the rest of the markets. Looking at the dollar, you can see here, I wanted to show you this. After a big move to the upside, which you would imagine with inflation and the look forward towards higher rates, or you would think. Wait till we show you the 10-year. The dollar is consolidating here, really nice triangle, just like we were in the SPY last time we talked in the last recording. So could we break up and hit that 161.8% extension? We could. Break down, test the 61.8. Again, when we have these symmetrical triangles, the potential is to move in either direction. But regardless, even if we break to the downside here, the dollar is staying pretty firm. Here's that 10-year that I was talking about. Well, you would expect, based on Chairman Powell's comments, that that would have rocketed higher, wouldn't you? That they think they're going to have to taper even faster than they initially thought, but he's been flip-flopping back and forth on that anyway, so I don't know if they're putting a whole lot of weight into what he says regarding the tapering program anymore. But this big move to the downside here is important because look where this wave 4 is. Right at the 61.8% fib level, which is my favorite fib level because I think it's the strongest one. So this is a good point where interest rates could hold in this overall 5-wave impulse pattern to the upside, where we could start to look to march up towards that wave 5 high. You can also see that we have retraced the breakout from this triangle. Again, classic Elliott wave corrective strategy here, or corrective movements. You break out of a triangle, that move gets retraced. Don't know when, but at some point in time it does. Sometimes sooner, sometimes a little bit later. But that's exactly where we are. So not only are we at the 61.8% fib corrective level, we're also right at the point where the breakout occurred with rates in September. A good spot for rates to hold if they want to. A little bit oversold here on the rates from the 10-day moving average. If we bounce from here, that's a pretty good sign actually. As long as we stay somewhere where we don't get too crazy low with rates or too crazy high, I think the market can start to digest that. But if we break below this, then we're going to be coming all the way down here, again, retracing the entire impulse move as we just talked about with the market, all the way back down here, retracing this entire wave 3. Then you start to get to the point where, all right, is this televising economic weakness on the horizon? All right, so Bitcoin, holy cow. Big moves lower. Now we look at this intraday chart, or excuse me, this end of day chart on Bitcoin. As you know, I know Bitcoin trades 24/7, so I'm going to give you current pricing here. But you're probably aware that on Saturday we had this big move to the downside in Bitcoin. Why did that happen? Well, a lot of people are saying that it's because of legislation that's in the new infrastructure bill regarding taxing on digital currencies. But we've known that for a while. That's been around for over a month, so that's old news. I don't really think that's what caused Bitcoin to drop, just what some are speculating. But we had this big move to the downside here, and at the time of this recording, this is where we're trading right back here above 49,000. So we came down to 43,200, somewhere in that area, and you can see again where we were. Right back down here, retracing this triangle. So perhaps that's all it was. We had this nice triangle. There's your big vertical, Elliott would call that a thrust breakout, where you get the vertical breakout move. So we came back down and we retraced that move, exactly what we were just talking about with interest rates. And then we've bounced back to the upside here. So when this labels, and we could be right in that 61.8% level on the corrective move, possibly 70, or we may have been low enough to violate this. We'll let the software tell us that. It's a lot smarter than I am regarding those things. Updating a few more markets, looking at oil. Oil had a big move to the downside. Very interesting piece of news about oil. As you probably heard, President Biden was after OPEC to increase production because oil was running crazy to the upside, and everybody was getting all upset about how much it was costing to put gas in the car. And OPEC did agree to raise production in their January meeting for 400,000 barrels a day. They were going to increase production, but they did a unique thing where they said they're leaving that meeting in session, which means they haven't fully committed to it. So it's still open. At this point in time, they plan to raise production in January, but that's before oil tanked back down. Well, I'd be surprised, is my personal opinion, that if oil doesn't have some sort of a significant rebound between now and January, it's likely we're not going to see that increase in production, and that alone could be enough to put a floor underneath oil and have it move back to the upside. At this point in time, there's no labeling on the chart, so we're in a corrective pattern following the completion of this wave 5. So where do you think oil goes from here? It'd be interesting to hear your opinion. Please post a comment underneath the video on whether or not you think oil rebounds from here, or is that it? Some are suggesting the fact that the concern over this Omicron variant could alter travel a little bit, and oil will stay back to the downside. And while you're at it, don't forget to hit that like button, or better yet, hit subscribe, and you'll be notified immediately when one of these videos is posted. Thanks, we appreciate it. Then you take a look at natural gas. Same pattern here. Big move to the downside in natural gas. We're right at that threshold of where the wave 4 needs to hold if there is going to be a 5-wave impulse pattern completed here with that 5-wave move. If not, then this is where we're looking on UNG back down to 11, where there's support going back into May of June of last year, as you can see. So same thing here. Important early part of the week to see if natural gas can hold in this area and mount some sort of a bounce. I did want to show you the Nifty because we talked about this so many times in showing some of the international markets that as long as it stayed above 49, you had to stay bullish, but if it broke 49, that's your exit, because we would likely see 47 in a very short period of time, and that's exactly what happened. Broke 49, boom, immediately down to 47, and we're trying to hold in that area. But I just wanted to bring that up because we'd mentioned it so many times as we were talking about this and how important it was to hold 49 and where we were likely going if it didn't. So all that was really spot on. All right, let's finish up by taking a look at the VIX as we always do. Big move to the upside, closing above 30 again on Friday. And if we take a look at a longer chart of the VIX, you can see that we haven't closed above 30 until going back into the end of January of this year. So pretty significant that we're closing that high. Now you can see down at support, we've built a pretty strong area of support on the VIX now at 15. So I think we can get rid of 16 and lower down to 15 as the support area on the VIX. So we're significantly above that. Obviously, for the markets to rally back to the upside, the VIX needs to come back down. But if we sprint higher from here, then that could spell that retracement we talked about, potential in the SPY. But the very start of the week is going to tell us a lot about where things go, and I'll be back to report it to you again next week. Hope you've had a wonderful weekend. Look forward to talking to you again soon. Take care, everybody. If you like these recordings, I'd like to invite you to join our new TradeFinder Live, where each and every week we do a live webinar where we talk about the market, but we also go a little more in depth into the technical analysis system that we utilize to forecast where the market's likely going to go, and also to identify trading opportunities. Get your free subscription today. Take care, everybody.